Thank you for joining us here at XM.com for the weekly outlook. I'm Christina Marujos, and joining me to have a look at the week ahead is Marius Hadjikyriacos, investment analyst. Of course, let's start by having a look at the UK. We're having the much anticipated elections coming up on Thursday, and of course, the outcome will affect the pound and, of course, Brexit. So, what do you think the outcome will be?
Look, I don't have a crystal ball that sees the future, but I will say this. The markets have taken the view that the Tories are going to win a majority. That is by far the most bullish outcome for the pound. It would imply that the Brexit process moves forward, some of the uncertainty goes away. That could help boost the economy a little. Now, the markets have taken this view because the opinion polls are showing the Tories being ahead by 10 percentage points on average, which is a huge gap, a huge lead rather. Now, the problem is that opinion polls are inherently unreliable in predicting UK elections due to the nation's first past the post system. They are very useful for gauging overall sentiment, but they don't accurately translate into parliamentary seats, which is what matters for who governs. Now, since the market has adopted the view that the Tories are going to win, and since the pound has moved higher on this, that means that this is the market's baseline scenario right now. So if that happens, the pound could still rise from here, but I don't expect any rally to be huge. So cable, for example, is trading around 131 right now to the dollar. We might see it head towards the 135 region. But on the other hand, if we get a hung parliament, that could come as a surprise to the markets. And that could trigger, in my opinion, a much sharper downside reaction in the pound. So if cable is at around 131 now, it might head towards the 125 region on a hung parliament outcome, for example.
Well, we'll be on the lookout for any developments, but before the UK elections, we have the Fed meeting on Wednesday. We're not expecting a rate cut this time. However, markets will be eyeing the dot plot for future action. How do you think the dollar will perform?
I don't expect the Fed to say anything really new right now. Nothing has changed really. So the last time Powell and his colleagues made it clear we are on hold for the foreseeable future. For us to act again, we would need to see a shock in the economy or a clear deterioration in the data. None of that has happened. The data are still pretty solid. The trade war, the truce in the trade war has held so far, and we might even see more de-escalation soon if the two sides reach a phase one deal. The point here is, I don't think they will change their message at all. The Fed is on hold for the foreseeable future, and most of the price action in the dollar will probably depend on the dot plot. Will the dot plot signal one more rate cut next year? Now, I don't think that will happen. I think the dot plot will show an unchanged federal funds rate for the coming year. There's no argument for the Fed to signal more rate cuts right now. The economy is in a decent place. Now, the markets, however, are pricing in, by this time next year, one full rate cut, which means that if we do get a dot plot showing no cuts, that could come as a hawkish surprise, let's say, for the market, and that could lift the dollar a little bit.
And now, speaking of central banks, the ECB is also hosting its policy meeting this week. It will be interesting to see Christine Lagarde at her first press conference as ECB president, what she has to say. So do you think we'll see any surprises or anything exciting there? And how do you see the euro performing?
I doubt the exciting part. The ECB is relatively divided right now between the hawks and the doves. That has markets thinking that they will not act anytime soon again. So what is Lagarde likely to say? I think she will pick up exactly where Draghi left off and start calling for fiscal stimulus. So governments, it's now your time to start doing some of the heavy lifting. Monetary policy is exhausted already. Now, the interesting thing about this, there have been some very interesting developments in Germany lately. The SPD party, which is in a coalition government with Merkel, they recently had a change of leadership, and the new leadership is demanding much higher spending on education, infrastructure, green energy, and so on. Now, that means that the prospect for real fiscal stimulus in the euro area, the probability rather, has increased a little bit. Merkel now has a choice. You either start spending more or you head to early elections next year. So I think that the outlook for the euro hinges entirely on whether we will get signals for fiscal stimulus. Right now, I would say that the outlook for the currency is dark, or cautiously negative, let's say. But if we do get those signals for fiscal stimulus, that would be a game changer, and that could trigger a sharp rally in the single currency.
I see. And last but not least, the US-China trade war. Now, the next batch of tariffs are supposed to be imposed on December 15th. Do you think we'll have any positive developments this week?
Look, I'm not an optimist. Yes, indeed, we've seen some optimistic comments lately. Trump tried to raise the stakes again. The point is, we've been hearing about a phase one trade deal for 2 months now. And we are still not there. Sticking points remain. And remember, these are the simple issues. If they can agree on the simple issues, I just don't see any real progress in the more complex stuff that is coming in phase two. But in any case, over the coming week, I don't think that Trump will impose tariffs. He doesn't want to hurt the US economy right now. That would hurt his re-election chances. So I think he will postpone those tariffs even if they don't reach a deal. If they're close, obviously, to a deal, he might postpone them. Not cancel them, postpone them. That, I think, would be relatively neutral for the markets. Nobody's really expecting Trump to impose more tariffs right now, so I don't see any major market reaction either way. But if he does impose those tariffs, then it would be a shock, I think, for the markets, and that would trigger a risk-off wave.
It's an interesting week indeed. Marios, thank you for joining me today.
Thank you.
And thank you for watching the Weekly Outlook here at XM.com.